Broom is also no slouch. The stock of the $638 billion corporation, which you probably didn't realize was that large, has increased by about 23% so far this year. What is causing their shares to eventually roll over then? Due to a recent unfavorable narrative about AI. Many people interpret the relative underperformance from Nvidia and Broom as evidence that the hyperscalers, those massive corporations also referred to as the Magnificent Seven, are spending excessively on AI infrastructure, and that this spending is not sustainable. After the employment number, Nvidia swung from being down 80 cents to being up. Did you know that? Those don't correlate, we're just overly sensitive. Would they have anything to do with each other? Would be Jensen Huang's response if he witnessed what we are doing in the stock market, which is to correlate interest rates with their activities. The reason is because individuals find it fascinating to create these concepts in their minds. One of its size build out, and well, I think it's a wonderful hypothesis when you look at the data center. People have attempted to demonstrate that Nvidia is a dynamic that leads to economic activity. The data center is one of the main drivers of Caterpillar, and there are a lot of companies interested in it. However, we are aware that Blackstone's Jonathan Gray purchased an additional data center. If they didn't think data centers were a secular narrative, they wouldn't be doing it. Data centers suddenly became cyclical around this time. The main premise of the economy's current state is cyclical, which will be confirmed by the fact that manufacturing employment are not increasing. I anticipated that they would rise. That wasn't good. It might have something to do with the good prints we received on the growth of building jobs. With the whole reshoring idea, I simply don't want to see manufacturing decline. What became of that? Additionally, AI now stands for AI build-out. It's strange because if we go back to the article by Michael Sasso that I mentioned earlier this week, he is really quite supportive of Nvidia and the application of AI. It just suggests that perhaps the hyperscalers are overspending. Elon's massive purchases are fascinating because he understands that he has no other option, as you indicated yesterday. Although he is the CEO of much more, it goes without saying that he would like to make them. He is Starlink's CEO. Consider what he is producing. The most hilarious part about former President Trump's remarks is that he doesn't have a lot on his plate. In essence, he is quite busy. He is the economic panoply, though. Additionally, I do believe that the data center is important, and that space is important. Additionally, I do believe that robots and artificial intelligence are important. The tech industry is down more than 7% this week, and we're having the worst week in around 18 months. What is the status of that trade? Since Nvidia had a strong figure last week, I believe tech showed its hand, but it plummeted. Therefore, when stocks decline on positive news, you can be sure that there is either a crowded trade or a negative development on the horizon. Naturally, they then took the lead in this week's decline. Because tech is a significant holding and people want to reduce risk, I believe it is a component of this pull-forward seasonality. However, I believe there may be a political component to this as well. In fact, Trump's chances of victory rose this week in both the polls and the betting markets. Additionally, I am aware that investors believe you will be tough on China, which would hurt semis. Therefore, I believe that some of this may be due to concerns that Trump's victory may harm semis. What if these stocks currently have too much priced into them? Even though you have argued that they are the best stocks in the world, valuations have become a bit too excessive. Perhaps more than any other location, this is where you want to be. What if the multiples still don't make sense, even if that is the case? I believe it is feasible. Nvidia has experienced 30% drawdowns, nearly 8 times as large in the last 10 years of its existence. During such drawdowns, its P/E, Nvidia forward P/E, was substantially greater. Nvidia's forward P/E is currently in the mid-20s. Therefore, this appears to me to be typical profit-taking. In my opinion, that will be a true gift in 2 years, even if it brings Nvidia back to the 1990s. Are you a buyer on the drop after considering all of these? Do you encourage those who read your work and hear you speak here and elsewhere to do that? We are almost there because, assuming we assume that there is a 7 to 10% chance of a decline between now and November, we have now dropped about 5%. We might be close to pulling forward that full correction into September by. We're almost there, I believe. I mean, I wouldn't sell here. And I believe that the S&P's lower range is between 5,400 and 5,350. We're getting close. If you would like more refinements, please let me know, of course. The script has been continued here with only minor grammatical corrections. You made an effort to slightly hedge your bets going into both Nvidia and Broadcom, correct? Discuss with me the transactions you made before entering. Yes, Scott, I believe that last week's thesis that Nvidia would be volatile was sound. The option markets were predicting a move of about 9%. It's impossible to predict if it will rise or fall. If you did, it would be much simpler. The same was true with Broadcom yesterday. There was a strong signal of an 8 to 9% move. We wrote a covered call with Broadcom yesterday, with a one-week expiration that will expire on Friday of next week. However, the yearly premium we brought in was 60%. We made $173 yesterday, and I know it sounds outrageous, but that's only due of the extreme volatility leading up to earnings. On Broadcom, we wrote a covered call. By the way, we hauled in $125 during last week's Nvidia call. So yesterday, we closed that off and made another Broadcom call. Over the last 2 weeks, it has generated roughly $3 in premium revenue. Granted, the stock has dropped significantly, but in just the last 2 weeks, those two option trades allowed us to hedge 20% of today's decrease. Thus, it was successful for Nvidia. For Broadcom, it's been a success. The equities are declining, so I believe we should wait a little while before adding to them. However, I believe you will have a chance to buy, and we are seeing levels that are comparable to where we were at the earnings. Pardon me, at the employment report last month, when there was a significant sell-off. Therefore, I think that would definitely be a fantastic starting point for individuals to purchase the dip. As a result, you're more inclined to buy this market than beware it. Indeed, we did not purchase anything today. It was a short week, you know. People are returning from the vacations for the first time this week. We wanted things to calm down because you get a lot more volume. Considering what transpired last month, we were also somewhat worried about the appearance of the jobs report. The jobs report statistics seemed reasonable to me. Regardless of whether the Fed cuts by 25 or 50 basis points, I believe that the market selling off is more of a growth issue than a recession concern. Although there is a lot of uncertainty in the market there, I believe that Broadcom has already returned to its previous level of performance on August 5th and August 7th. Although Nvidia isn't, it is undoubtedly getting closer. Scott, I would definitely purchase the dip, and we will. Since Nvidia will be mentioned, it might as well be brought up. You know, before the COVID, Nvidia's revenue growth was negative, but in early 2022, it increased by more than 80% year over year. Then, as you most likely recall, there was this COVID hangover. Demand began to decline. Those three large hyperscalers began to reduce their expenditures, and by the end of 2022, Nvidia's revenues had dropped from over 80% to over 20%, and the stock had dropped 66% during that period of digestion. However, Dan is disputing several of your points. All right, so in the early 2000s, minus 20 years ago, Amazon was penalized because, contrary to what some people had hoped, all of this logistics spending was not producing money. However, if you were patient, let's keep traders and investors apart for the moment. Amazon's efforts did pay off. What makes AI unique? You must keep in mind both the short and long term. You are neglecting to inform investors that Amazon's stock fell around 95% from its peak to its lowest point. Therefore, I personally don't want to go through that if you do. That's okay. But keep in mind that when I turned negative on tech stocks in 2000, I never would have imagined that the Nasdaq would drop 78% from its high to its lowest point over a 2.5-year period. As a result, compared to the internet infrastructure rollout, this AI investment has been made at a far faster rate. For example, Cisco's revenues increased threefold in 6 quarters after the debut of Netscape Navigator at the end of 1994, compared to 7 quarters earlier. How much money has Nvidia made since ChatGPT was introduced at the end of 2022? Their revenues have increased 5 times, not 3 times. This build-out has been considerably faster, and now you're beginning to notice that. Similar to the post-dot-com era, when things began to slow down at the large internet companies who were investing in all that infrastructure, the forward numbers are beginning to decline. You're mentioning Amazon, but you're ignoring the 5,000 internet businesses that also went out of business during that time. It's not 5,000, sorry.